Good afternoon. It's been quite a while since I've uploaded a web tutorial, and that's because I've been hard at work behind the scenes, creating what I think is a masterpiece, but that's a pretty one-sided opinion. But if you have seen any of my previous videos, I don't have a lot on my YouTube channel, but I created the NEC, an application called NEC, which stands for New Equity Curve, and of course it is built for, in particular, prop traders, and in particular of the subsection of prop traders, the futures prop trader. Again, if you want to see any of my previous videos, they're right here on this channel. They were all built originally in an Excel application. So a little bit about myself. I'm a trader. This is my 29th year as trading, and 25 of those years have been as an options and derivatives trader, both on the retail and on the institutional desk. So a lot of experience in the options market. I didn't really play directional. I was more on the hedging side, risk management. And when I left that space, I haven't totally left it. I still manage my own capital. But when I transitioned from an options and derivatives trader, basically I exploited mispriced options volatility and then tried to capitalize on theta or a collapse in implied volatility. But when I left that space, I got into futures prop trading, and this is, I guess, the fertile soil which kind of caused me to want to create this application called NEC. Very analytical in my past experience and training, and I didn't see any of that in the prop future space. Not at all. In fact, I personally think it's a bit of the wild, wild west in the capital markets. I wouldn't even define that as capital markets. It's almost like anything goes. There's no licensing required. You're not dealing with clients. You're dealing with evaluations and prop firms and a lot of mudslinging from what I've seen in the past 3.5, 4 years in my journey in the futures prop space. So I talk too much. That's just my nature. I like to be articulate and explain what I've built, and sometimes I get a little bit too wordy. I get a little too granular. So I'm going to cut myself off on this preamble and just try to jump into exactly what I've built here. Like I said, it's masterclass, and I know for a fact a few customers that have already purchased this from me, and people that I kind of have mentored they're impressed. I could use other adjectives, but I'll just say they are very, very impressed, as am I. So without further ado, this is the NEC, the new version. And before I jump into the actual application, I was going to say that I'm going to show you, or just read to you, how this came about. Now, this is going to go up on the website. And again, this is my first video in at least 3 or 4 months. And this is all going to go up on the site. But I just thought, as a bit of a preamble, I will read this through to you. And it's kind of a culmination of my thought process as I started building this and what it's actually led to. Again, I started the NEC application in Excel probably about 5 or 6 years ago, even before I left the derivatives trading and the options trading. I was already looking at directional trading and things of that nature. And then, as I said, about 3.5 years ago, I got into futures prop trading. So let's begin here with, this will be going up on the website, something called the thesis. And I'm just going to read it quickly. So the founding argument behind NEC and the shift from passing evaluations to engineering a prop trading business. That was the shift. Initially, when I got in, like probably everybody, how can I pass this evaluation without blowing the account? How can I quickly get past the evaluation so that I can get into at least trying to cover off the buffer and hopefully get paid? And by the way, I'm going to say something empirically, and you'll hear me use that word a lot, that adjective a lot. 93%, and this is verifiable, any one of you has, if you're listening to this, you have access to a computer or a phone, Google it or use AI, 93% of every single trader in the futures prop space, I don't know about FX, but in the futures prop trading, never receive a payout. They never receive 10 cents, not a dime. So 93% failure rate. Now, you might get through the evaluation, you might get even through the buffer, but you might blow your account shortly thereafter. But the bottom line is, of all the thousands, tens of thousands, hundreds of thousands of, if probably millions, of evaluation accounts that are purchased across 40, 50, 60 different futures prop firms that are out there now, only 7% will actually start to get a pay. And I do not know the numbers, so I will not make them up, but I don't know the numbers of, even if you get to a pay, what is the percentage of that 7%? So let's say there were 100,000 traders and 7,000 are the ones that are getting the pay. So of that 7,000 subsection, how many are consistently getting paid? That's the real question. And that is where this application evolved from. How do I pass an evaluation to how do I engineer a prop trading business? Okay, so we'll scroll down. Something extraordinary happened. The barrier to institutional sized trading capital collapsed. A trader with a modest evaluation fee could suddenly pursue an opportunity many times larger than their personal account. The industry expanded, access exploded, possibility became immediate. You know what I'm talking about with that. And yet most traders never receive a single payout. If almost everyone understood the odds, why does participation continue to grow? And it says it right here. People are not buying evaluations, they are buying possibility. The opportunity is real, but somewhere between opportunity and sustainability, the framework breaks. For years, the entire conversation revolved around one question. How do I pass? Courses, signals, indicators, coaching, strategy rooms, everything pointed toward one outcome. There was only one problem. Passing an evaluation is not a business. Professional businesses do not plan, Professional businesses do not plan around perfection. They forecast, they budget, they measure, and they survive. Funny enough, I'm just going to stop here for a second. Under survive, it says the business is designed to continue when outcomes disappoint. NEC began with a practical question. How long is this going to take me? That is why I built the original NEC application in Microsoft Excel. I wanted to use Monte Carlo simulation, and I know how to code and program, and I wanted to figure out, based on how good of a trader I am, or how poor, we're all at our own level or journey in this game of trading. You might be brand new and have been trading for maybe less than a month. Or maybe you are a little bit more seasoned and you're at month 18. Or maybe you're a veteran trader, such as myself, but not in the futures prop space. But I've got a lot of experience in the trading and capital markets. But maybe you are more seasoned where you've got 3 to 5 years or more in directional futures trading. So NEC began with a practical question. How long is this going to take me? It began as a disciplined Excel model built from decades of derivatives experience, probability thinking, expected value, and risk surfaces. It evolved into a Monte Carlo engine capable of stress testing a trader's real statistics against the constraints of a prop evaluation. The math was already sophisticated. The original objective was simpler. Help the trader understand the path to passing. The software was not wrong. The question was. I'll say that one more time. The software was not wrong. The question was. As NEC evolved, the focus moved beyond the struggling trader's immediate question and toward the operating behavior of traders who were already succeeding. Those traders were not thinking about one evaluation, one account, or one emotional outcome. They were allocating, rotating, measuring, replacing, and scaling. NEC replaced its central question, how do I pass this evaluation? That was the original objective, to the evolved objective. How do I build a prop trading business? One new question reorganized the entire system. Failure. Forecastable cost. Evaluation failures become operating assumptions. We don't hide from them. It's part of business. Capital, planned allocation. Reset and account costs become budget decisions. Time. Measurable path. The journey becomes a probability-based projection. Cash flow. Business output. Payouts become part of a repeatable operating model. NEC did not mature by adding more features. It matured by replacing its central question. That is a rarer and more important kind of evolution. Most trading software asks how to improve the next trade. NEC asks how to structure the business behind thousands of trades. The moment that question changed, every capability found its purpose. Probability became planning. Risk became architecture. Position sizing became capital allocation. Expected failure became an operating assumption. NEC is not another trading app. Monte Carlo simulation, position sizing, risk modeling, probability engines, trader stability, and capital planning are not isolated features. They are components of a single operating framework. NEC is decision intelligence for the business of prop trading. Finally, and I love this, and I had to think about it when I put this together, the future of prop trading will not belong only to those who trade better. It will belong to those who build better businesses. The industry does not need another trading app. It needs a business operating system. This is the NEC. Engineered, quantified, allocated, and compounded. Every position sized against a defined max drawdown, not a gut feel. Probability is quantified. Monte Carlo odds behind every real decision, not hope. Capital allocated, structured across prop firms like an actual portfolio. Growth compounded. Reinvestment cascades at scale, contracts on proof, not luck. So we're going to move on. This is the corporate cinematic screen that I wanted to share with you as well. And again, I'm moving towards step by step some of the marketing and promotional material that's going to go on the website. You're going to see it in a lot of social media posts. So I'll just quickly go through this. It's not as long. Most people learn how to trade. Very few learn how to think. NEC exists to change that by moving prop trading away from reaction, spectacle, and hope, and towards disciplined decision engineering. The industry teaches trades professionals engineer decisions. Every profession has one, a standard. Surgeons prepare before the incision. Architects design before the first brick. Pilots plan before the runway. Trading should demand the same discipline. Preparation, model before action. The professional does not begin with the trade. The professional begins with the decision architecture surrounding it. Measurement, know the risk. Risk is not a feeling. It's a system of limits, probabilities, recovery paths, and capital constraints. And repeatability, build a process. One winning day proves nothing. A repeatable decision framework is what turns activity into a profession. From trade to trade engineer. This is not an upgrade in vocabulary, it is a change in operating standard. The trader searches for certainty, asks where to enter, measures the outcome, celebrates winning days, reacts to the market, trades for the next result. The trade engineer manages probability, asks whether to enter at all, measures decision quality, studies every decision, designs the operating framework, builds for repeatability. Anyone can place a trade, very few can engineer one. Trade engineering is the discipline of designing decisions around probability, capital, risk, and repeatability before execution ever begins. The market does not care how hard you tried, it only records the decision. Every decision leaves a mathematical signature. Decision intelligence in action. No promises, not performance theater, 6 windows into the system NEC gives professionals before capital is ever placed at risk. And we're going to get a peek now at the NEC for the first time. On the very first landing page of NEC on your mobile app, you're going to get to choose from what futures firm you're going to choose from. I'm saying profit because I'm looking at Take Profit Trader. You can choose the prop firm that you're using. You can choose the account size, and everything else is pre-populated for you. So if you do choose Take Profit Trader on the 50K account, which is pretty popular, it pre-populates down here, 50K, tells you what the cost is. Now this is before any promotions that they're running or discounts. The payout is 80%, and then it goes up to 90% on the Pro Plus, or drops to 90% on the Pro Plus, or you get to keep a bigger part of the split, is what it says. And it tells you the max number of accounts that you can have and how many contracts you can trade. So you're allowed 5 accounts with Take Profit Trader, and you can trade up to 60 micros. Okay. Then we get into analysis, and you know what? I'm not going to go too deep into these. These are just screenshots of the actual application. We have a run log, Cascade. I can't really show you this because these are just screenshots. Then what really starts to separate the NEC is the post-trade way that you handle your profits and losses. You get into the reinvestment cascade. How can you build your portfolio of not just accounts, but actual prop firms? So you can have a prop firm and have 1, 3, 5, 10 accounts, depending on what the rules and restrictions are with that particular prop firm. So let's say you've got 5 accounts inside of Take Profit Trader. That's one prop firm with 5 accounts inside there. But what if you have 4 or 5 different prop firms, all of them with 4 or 5 different accounts? All of a sudden you've got 20 or 25 accounts that you are trading across 5 different prop firms. I teach that, or this NEC shows you how to model out how to handle everything, right down to the individual account, to the prop firm, or to multiple prop firms. Results, okay? So if you look at the bottom here, it says, results, explore equity outcomes across segments. This would be the first 30 trade outcome. This is the first 150. And of course, if you remember, or if you've not seen, the NEC was built around 600 trades. So Monte Carlo means if you are a 50-50 trader and your R multiple is 3, whatever that is, and you choose to scale out of a winning position where you may take some of your, you can actually model how many contracts you want to take. So a trader is a 50-50 trader, has a 3R multiple, has a, let's just keep the math simple, 20-point stop loss, which has a 3R multiple, which would be a 60-point profit target. You can scale out of that winning position, whether you take all your contracts off at the first profit target, or you say, I'm going to sell one of my 3 contracts or one of my 10 contracts, whatever you want. So this shows you your P&L on the first 30 trades, trades 31 to 150, and then 151 all the way up to 600. Okay. And then this is where it gets really complex and really dead sexy, for lack of a better adjective. This is where you can put multiple prop firms together with multiple accounts in each of those prop firms. And it will tell you, this application will tell you how long on average it's going to take you to pass, the kind of capital, the kind of cash flow that you can have. It'll tell you how long it'll take you to pass each individual prop firm. All of it is based on the user-defined variables. It's called the SYN call engine. The SYN call, what does that mean? I'm just going to digress for a second. Remember my background? It is in derivatives and options trading. I realized that when you buy a $100 or $150 evaluation and you blow it, that's almost identical to a synthetic call. That's where the term SYN call engine comes from. If you know anything about options, there's something called a 0 DTE, so days to expiry. One of the biggest growth sectors in the CBOE's history is when they introduced, I think it's about 2 or 3 years ago now, maybe I'm off on the timing, but it's been around for about 3 or 4 years, and it is 0 DTE. What that stands for is 0 days to expiry. You could literally buy an options contract on a Friday at 9:30 a.m. in the equities market, and that option ceases to exist 6.5 hours later at 4 p.m. 0 days to expiry. So you are basically buying a 1-day option contract. It's very similar to barrier options, and I don't want to get into all of that stuff, but you would go in and spend $500, $600, $700, and let's say you bought it on Microsoft, and Microsoft was trading hypothetically at $250, and you could say, I think Microsoft can get to $255 by the end of the day. You've got 7 hours to do it. Maybe there was good news, I don't know. Whatever the reason is irrelevant. The point is, you could buy an option contract, and with options, the more expensive it is, it's usually associated with time. You can buy an option that expires 6 months from now, 6 weeks from now, 6 days from now, or you can buy a 0 DTE, and it would cost you $300, $400, $500. And the trader who purchased the option, not sold, purchased the option, knew that by 4 p.m. either it hit the 255 plus the cost of the premium that you paid for the option. Then, if it hit that and went beyond, then you would make money. If it didn't, you lost your money. That is exactly what a evaluation account is. When you purchase from Take Profit Trader or from Tradeify or from My Funded Futures or from Lucid, it doesn't matter which prop firm, you give them a fee and they give you 30 days to try and pass this evaluation. If you blow it, you're going to lose about $100. So that's where the name Syn Call, it's synthetic call. You buying these prop firms in the evaluation phase is identical to a synthetic call. So that's why it's called the Syn Call engine. A little bit too wordy. See what I said? I talk too much. Anyways, finally, we get into the shuffle. And this is phenomenal what this can do, and I don't want to get ahead of myself. I'm randomizing the scenarios. So one of the things that the NEC built its reputation on in the XL version is if you hit F9 on your keyboard, any keyboard around the world, you hit F9 and it will randomize or engage the Monte Carlo simulation. What it will do is it will never change your user-defined settings. If you are a 50-50 trader, if you are a 40% winning trader, 60% losing trader, if your stop loss is 10 points or if it's 40 points, if your R multiple is 2 or it's 3.2, and any of the metrics that you put in there will never, ever, ever be altered by the application. What will happen is we will shuffle the order of random wins and losses. So if you told me you're a 40% winning trader and a 60% losing trader, if you hit F9, it randomizes 600 potential outcomes. It will never change your performance, but it will tell you whether your system can survive 8 losses in a row. Okay, it tells us whether your stop loss is too large. Okay, so if you've got too large of a stop loss, and let's say I said 40 points in this example, and you took 6 losses in a row, you've blown your account, right? So these are the things, this is the granular deep dive analytics that 99% of traders never do when they put the trade on. They'll do a lot of homework on their charts, but they don't run what if scenarios ahead of time before they put their capital at risk. And that's what this screen shows you, randomizing the scenarios to find your edge. So every screen answers a question professionals ask before risking capital. One more before I just give you a taste of the application. And it's called Engineer the Decision. Stop managing trades, start operating a business. NEC provides a repeatable business framework for operating in the prop trading ecosystem. It turns isolated trading decisions into a measurable, repeatable operating model. That's my corporate logo here that you're seeing. Passing an evaluation is an event. A business is repeatable. NEC reframes prop trading from a sequence of emotional account outcomes into a disciplined operating framework. First of its kind that I know of. Think like an owner, not a gambler, not even a trader. An operator who plans, allocates, measures, and compounds. Every decision leaves a signature. Position size, risk, probability, and execution create measurable evidence before the outcome arrives. Engineer for uncertainty. The objective is not to avoid every failure. It is to build an operation that survives and prospers. We believe traders should stop asking, how do I pass this account? And start asking, how do I build a business capable of repeatedly producing, managing, and compounding opportunity? NEC exists to replace isolated decisions with structure. It helps traders approach risk capital allocation and account growth with the discipline of a business owner, not the emotion of a gambler. From trader to operator. Once again, I already put this in the other slide, but the old model was protect one account at all costs, judge performance, trade by trade, confuse activity with progress, treat failure as a personal defeat. I've done that. Depend on intuition under pressure. Never a good recipe. The NEC model, manage accounts as a business. Notice I said accounts, not one, but plural. Measure performance across the decisions. Allocate capital with intention. Plan for operating expenses and uncertainty, aka blowing some evaluation accounts. That's going to be inevitable. Build a framework that can be repeated. The art of succeeding in prop trading isn't avoiding failure. It's engineering a business that both survives and prospers. Engineer the business, then engineer the decision. That is the corporate slogan that I came to after months of building this application. And without further ado, I'm just going to jump right into the NEC application. I'm going to pause here for a second and I'll be right back. You won't notice it, but one moment. Okay, and I'm back. And again, you probably wouldn't have noticed. So I had left off right about the point where I'm going to show you the NEC application and show you just how fantastic it is. Again, that's a pretty biased opinion, but I'll let you be the judge. So this is the landing page. The first thing you're going to see, everything is what I call nudge friendly, meaning it will prompt the user where to go next as they populate this application. But the first thing you want to do, and it says it in bold letters, well, not such bold letters, but it does say select your prop firm account size. It says select your prop firm and account size. This autofills the eval target, max drawdown, buffer zone, and starting value. No more digging through PDFs to find your own number. So I can just click here, and here's what I've got populated for now. I can expand on this, but it doesn't really make a difference. Here's why. If I put if I select Take Profit Trader and I go with the 50K account, or if I believe there's a new firm out there called FN Funded Network or something like that. They're pretty popular. Don't hold me to that name. I don't know them very well. I've heard them being thrown around. But the point I'm trying to make is if you select a 50K account with them, and they probably are going to have the same profit target and the same stop loss. Now, in some cases, that is not the case. But I've got some of the big ones here. Take Profit, Apex, Top Step, Lucid, My Fund of Futures, Tradeify, and Trade Day. And those are all highly ranked. Other than Apex Trader Funding, which doesn't exactly have the best reputation right now, the other ones are all top tier. And maybe even Top Step's a little bit iffy with some of the changes they've made. But Take Profit, Lucid, My Funded Futures, Tradeify, and Trade Day are all excellent prop firms. So I'm just going to use Take Profit Trader. And then, of course, it prompts you. I just kind of wrecked it, but I'll show you in a second. It says select the account size. I'm just going to use the 50K account. And once again, anytime it's glowing or pulsing, that's trying to indicate to the user that's the next place you want to, or next field that you've got to populate. Now, this is interesting. I built this, and I've always wanted this. This is your personal goal. So passing the evaluation, okay, passing the evaluation is you don't get paid. Everybody knows that. You've got to pass the evaluation, which is $3,000 on the 50K Take Profit Trader account. And of course, you can't hit the max drawdown. Then there's the $2,000 buffer. So what I'm trying to demonstrate is you don't get paid for getting through the evaluation. You don't even get paid, or you cannot withdraw money until you've covered off that buffer, which is $2,000. So I always used to say, well, I'm not getting paid for that. When's the payoff? When do I actually put money in my pocket? Well, to determine that, you need to put in a dollar amount, and this is a personal dollar goal. How much do you want to make? What is your dollar objective on your first payout? So I've put $3,000. So what the application will do is say, okay, first $3,000 is covering the eval or passing the eval. The other next $2,000 is covering off the buffer, and then an additional $3,000 will be your first payout, of which, remember, Take Profit Trader is going to keep 20%. So I'm just going to leave it at 3,000 for now. And then if you look up here, it's glowing and pulsing, and we go to setup. This is where it gets real fun. I'm not going to get into all the tools and features. It's pretty impressive what this can do. But I've got a button here called Quick and Dirty, where if you just want to say, listen, AI, and by the way, this has got an entire tab down here on the navigation bar called Versus AI. So what you're going to do, or what this application is structured for, is put in your own trading metrics. And what I mean by that is, once again, how good of a trader are you? What is your profit target? How many contracts are you trading? What's your R multiple? Do you take all your profit at the first profit target? Or do you scale out? So if you traded 3 contracts, I'll take 1/3 at this profit target, I'll take another third, and the final contract I'll sell at this level. That's all up to you. And that is a user-defined build. But if you want to just bypass all that and you're in a hurry, you can hit what's called Quick and Dirty. And Quick and Dirty will use AI, and it asks you one single question. One question. How good of a trader are you? Out of 100 trades or out of 1,000, how many wins do you have versus how many losses? And that is a very personal answer. And I said this in my other tutorials, I'm going to repeat it here. Don't worry about what the number is. If you're only a 33% winning trader, put it in. That's the only way you're going to get better. It's going to tell you, are you trading too many contracts if you're only that good of a trader, or actually not that good of a trader. Again, we're all at some point in this journey as a trader. And there are some traders out there that are absolutely fantastic. They're few and far between, but there are some out there that would say, hey, listen, I'm right on 75, 80%, maybe even higher. That's very rare. I'll just tell you that right now. But if a trader is above 70 or 75%, they're writing their own ticket, meaning the sky's the limit for them if they know this game. They certainly know how to trade. So put in your own user number, or if you want to bypass it, that's what the Quick and Dirty is for. Now, let's say you build your own application or you build your own settings. You can save them. You can save them as I'm only an evaluation. I've built it so that you don't have to repeat yourself every time in building the way that you trade and your performance metrics, and you can save them. You can do eval as an aggressive, or you could do eval optimal, where you're, generally if it's an eval, I'm aggressive. I want to get through the evaluation. I'm not crazy like some traders out there, but I will be more aggressive with the number of contracts, with my profit objectives, with my stop loss, because I just want to get through that profit target, or the profit target, or past that evaluation level as quickly and as aggressively as possible. And I'm going to show you some other things as well. And it costs you money trying to play it safe. And I actually built an application. I've got it. I don't have it open at the moment. I'll open it for you before I wrap up. But I just want to touch on all the features of what you can and cannot do with this application. So let's go ahead. It pre-populates for you. We're not going to use the Quick and Dirty. We're not going to use your saved profiles, because those are, in fact, I'm going to actually load one here. So see, you can see it says load, and then it takes you down to what's called TSI, which is the Trader Stability Index. It is a proprietary indicator, which is, it asks 3 questions. Under TSI, it says your ideal number of trades to pass the evaluation. So you put in a number and say, listen, I want to pass this evaluation ideally in under 30 trades. Your ideal max drawdown. Okay, so what does that mean? Well, if there's a $2,000 maximum drawdown on the 50K take profit trader, you would say, I don't want to really, in a perfect world, my ideal scenario is I don't draw down more than $1,000 of the $2,000 that I am allotted. Okay, so 50%. And then finally, if you do have a drawdown, if you have a few losses in a row or whatever, which is natural, it does happen even to the best of traders, how quickly do you want to recover? So that is your ideal recovery rate. So how many trades in a perfect world would you maximum want to have to take to get yourself back to the high water mark? So I put 4 here. So if I have a drawdown, I want to know that within 4 trades I can get back to where I was. Those are my ideal settings, okay? Those are in a perfect world. Now, if you take it one step further, I could say, what of the three, what's the most important? What is the most important? And most traders are going to say, I just want to pass. I just want to get through this evaluation. So you can take it, and it says right here, speed, preservation, and recovery. So you can grab the speed indicator and just slide it and say, I think that out of this TSI score that we're building a score, and I'm going to show you how it's applied. 70% of that should come from me passing as quickly as possible. So I want to give that a weighting. We're weighting the importance of passing, how quickly, how close do I want to come to my drawdown, and how quickly can I recover after a drawdown. So a trader, or most traders in the evaluation, will say speed. I just want to get through the evaluation. I'm not too worried about preserving the account. And yeah, recovery is important, so I'll give that a ranking of 21. These always will have to total 100. Okay, it's on a scale of 100. So if I change this and say, well, I don't want to blow the account too much. Speed is important. Getting through the evaluation as quickly as possible is priority 1, but it's not everything. So maybe you give a bit of a ranking to preservation. Me personally, here's where I like to set it.
I like to bring down preservation. I'm not worried about holding on to a $100 eval account. I do want to pass as quickly as possible, but if I have a bit of a drawdown, I also want to know that I can recover within 4 trades. So those are my weightings of importance. And in this mathematical calculation where I said I want to pass within 30 trades, I don't want to come within 50. The maximum I want to come to my max drawdown is within 50%, and I want to recover within 4 trades following a drawdown. All of those goes into the calculation with these personalized weightings. Then what you do, but before I do that, it's prompting me to click settings loaded, and that's because I clicked on the pre-populated. So up here, what we want to do is say, how many prop accounts do you want to trade? Well, for now, I'm just going to say 1. Okay, and you enter your stop loss. How many points? I could say, I don't know, I'm just going to make it up as we go. Let's say a 25-point stop loss. Okay, commissions, and how many trades do you take a day? I don't know, let's say 5 trades a day. Okay, and do you want to copy trade across multiple accounts? You can uncheck this or you can check it. Okay, if you're going to copy trade. And then you scroll down and say, all right, I've got a 25-point stop loss. I'm trading 5 times a day and I've only got a single account. Not a problem. Let's actually say we've got 2 accounts because I'm all about building the business, not just trying to pass an eval. So let's go 3. We'll go 3 prop accounts, 25-point stop loss, and we're going to take 5 trades a day and we're going to copy trade them. So our stop loss is going to be $150. You may say, well, where'd that come from? Well, because I said we have 3 contracts. So we've got 3 accounts, but that's different. This is contracts. If I change this value here just to 1, if I change that to just 1 contract, you can see my stop loss is $50. How did that happen? Well, it's $25 point stop loss. Sorry, a 25-point stop loss. When you're trading the micro NASDAQ, I'm sorry, I forgot to tell you, it's on the micro NASDAQ. In fact, I've never used anything but the micro NASDAQ. But there are different contracts you can trade. The micro S&P, the NASDAQ itself, which is $20 a point, the ES, M2K, which is a micro Russell, which is very thinly traded, not a lot of liquidity, and so on and so forth. But for sake of time, I'm just going to stick with the MNQ. It's $2 a point. So a 25-point, I put a trade on, I get stopped out. Well, I just lost 25 points times $2, and I'm trading one contract here. That's going to cost me a loss of $50. 25 times 2 is 50, and I'm only trading 1 contract. But if I change this to 2 contracts, now I'm risking 100. If I change it to 3, now I'm risking 150. What else is interesting is this is making the assumption that these 3 contracts, I'm going to sell all of them at PT1. PT1 stands for Profit Target 1, and in brackets you see R. I put in 3.33. That's 3R multiple, or 3.33R multiple. So it's 150 times 3, which is $500. It calculates for you. If I go to 2 contracts, it's $333. Okay? So if I, just to show you that this works, if I just rounded it to, whoops, I'll make the math simple. I'll just make it at 3. There it is. I'm risking 100, and my R multiple is 3 times. It's $300 because I have 2 contracts. 150 times 2 is $300. But what if I wanted to scale out? I'm like, well, listen, I love having 3 contracts, but I don't sell them all at the first profit target. So I'll just say, okay, 1 here, maybe a contract here on profit target 2, and a contract here on profit target 3. And what it does is the platform automatically calculates based on your R multiple. So profit target 1 is 3 points, or 150. Profit target 2, I jumped it all the way up to 8 points, which would pay $800 on a cumulative basis. Okay, it says it right there in cumulative. And here, this is a trailing stop. So what if we're on our way to profit target 2 and it doesn't quite get there and then it falls back? Well, we have a profit target 1 trail, and that's a 5R multiple. So that pays $450. And then, of course, we go all the way to profit target 3, and I've got, let's just make it nice and simple here. I'll make it 10. A 10R multiple, that's big. That's 250 points. Our stop loss, if you remember, is 25 points right there. And 10 times 25 is 250 points, right where my mouse is. And that would pay $1,050. So this is a trader who takes profit target 1 and sells 1 contract, hits profit target 2, sells that contract, and we're hoping for that big run. I mean, that's what every trader wants. And we have an auto break even after a certain profit level is hit. So I'm not going to get into that at the moment right now. So we scroll down and say, now what's the probability? What's my win-loss ratio? So out of 100 trades, how good of a trader am I? I don't know, let's say I'm a 48% losing trader, which then automatically gives me the 52% winning trade. Now, out of the 52% that are not stopped out, I call it non-losing. Okay, so out of 100 trades, 48 of them hit our 25-point stop loss. We're gone. It's done. It's over. The trade is finished. We got stopped out on 3 contracts, and that resulted in a $150 loss. All 3 contracts are gone. But what if it's not stopped out? What if it goes on? And that's why I call it a non-losing. But someone may say, well, why didn't you just call it a winning trade? Because it's not necessarily a winner. That's why. Because it could go on to become what's called a break-even. Every one of us have taken a trade where it starts to go in our favor. We move our stop loss from 25 points up to break-even. So now we have 0 risk on the table, but we have not made anything yet either. We are waiting and hoping it hits our first profit target. But just in case, we have a break-even component. So out of the 52% that did not get stopped out, we're going to go and say, let's say 25% of all of our trades end in a break-even. So now, if you look here, right where my mouse is at the bottom, break-even is 25 points. This tells you the math, okay? Because you have 3 profit targets. So profit target 1 is the easiest to reach. That's just the way it is. So let's just say how many reached. We have 33 to go. So we've used 42% of the 75 that are not break. So let's it's called gates. 48% of our trade. Here, let's make it easy. 50-50, okay? 50% of all our trades will end up in, I just got stopped out. They're gone. They're finished. The trade is over. But 50% go on to become non-losers. Now, of that, 25% of the 50% are just break-evens. You don't make anything at all. No profit. 75% will go on to become a payday. That's 75% of this 50%. Now, of that 75%, what percentage hit profit target 1? Well, let's just keep the math simple, okay? So we're just going to say 40% hit profit target 1. And let's go to profit target 2. And what do we got? We got 35 to go. Let's say 15% there. And you can put this in. And this is based on your own real trading experience. I don't know what your profit targets are. You may sell everything at the first profit target. You may take it off in 2 profit objectives. In fact, let's do that. That'll make it easier. So we're not going to do a profit target 3. We're going to get rid of that. And we're still going to trade 3 contracts, but we're going to sell, we're going to sell 2 up here. And we're going to sell 1 at profit target 2, and then we stop. Okay? So we've got 3 contracts in total still right here. We're still risking $150, but what we're going to do is sell 2 of the 3 at our first and easiest profit target. Then we're going to jump to profit target 2. We're going to sell 1 remaining contract with an 8R multiple, which is 200 points. And on a cumulative basis, it's going to pay us $700. Not a bad R multiple. 150 risk and the potential to make $700. That's called asymmetry. So we're not going to get into that. So now 50% of every trade we take, we've acknowledged, ends in a loss. We get stopped out. But the other 50%, 25% of these will just result in a break even. Now we're narrowing it down. We're playing with reality here. We're modeling, and this is what I said in my manifesto, in my thesis, which is model these numbers out, not just to pass a single evaluation, but to build a business. So I'm acknowledging and accepting not every trade is going to go on to become a winner. They could end in a break even. So 75% will become a payday. Then we break it down even further. Okay, what percentage made it to profit target 1? Well, let's just, or to profit target 2. Well, let's say 50% hits our profit target 1, and it says right down here, 75% has to be covered off. So I just used 50% of it, and that leaves us with, it says 25 to go for 100%. So let's say 15% here, and then there's 10 to go, and we'll say 10% reaches profit target 2. And see how it turned green? That means everything's perfectly aligned and entered. 50% of the 75% that did not end in break even will pay us and reach profit target 1. 15% will end up paying us on the profit target 1 trail, and only 10% will probably hit profit target 2. That's okay. It's the biggest payoff, but it's the hardest level to reach. Okay. And what we do is then we just say settings loaded. Do I want to save this? No, well, you know what? We'll save it just so you can see the example. Save. We'll save this as eval aggressive. We'll hit load. Oops, not load, sorry. We want to hit save. Click OK. Do you want to save your current? Overwrite anything that's there. OK, and we're done. And so we just saved our settings so that you don't have to go through that exercise every time. And that includes your TSI or Trader Stability Index calibrations. So if you notice up here, it's glowing, F9, we click on it. And the first thing that's glowing is run 100. Let's run 100 sample sizes. Now one sample size is shuffling 600 trades. Okay, so we're going to run 100 of 600. It's running 60,000 potential outcomes every time I hit this button. So let's go ahead and do it. And we are shuffling your performance metrics that you just entered on the setup phase. So we're now on the results tab. Okay, so that's clean and complete. And it says right here, your Trader Stability Index is very, very low at 15. A passing level on your Trader Stability Index is 55 or greater. I have found that 55 or higher is a stable setting, okay? But we're just going to continue because this is illustrative. So we're just going to leave the 15 there for now. Then we go to the Analysis tab. Let's analyze this. Once again, it's nudging us with a glow and a prompt which says clear this out. You've always got to clear it. We clear it. We hit run 100. Once again, we're going to run six. It says right here, you can see it, 30, 40, 50,000, 60,000 potential outcomes. And it says our average TSI is 65. So you may say to yourself, but the last screen just said it was 15. That is a single, okay, it's changed. Now it's at 86. When you see this results, all these results here, it's a single outcome, a single roll of the dice. It's not on an aggregate or cumulative basis. Under the Analysis tab, it's saying you're doing well. It's well above the 55, okay? And that's a passing rate. Your average TSI is 65%. 65 is the count, and you're passing 62% of the time. It tells you how many days it will take for you to pass this evaluation. So, that's the number of trades, but how many trades are we taking per day? It tells us here, it's going to take us, I can't even see it because I'm in record mode, but this is the number of trades it's going to take you. And if we're taking, let's go back here to setup, and let me scroll up to the top here. So we've got 3 prop accounts, 5 trades a day in each of these prop accounts. So it's probably going to take 5, and what did I say, 70 trades? 47 trades. So how many 5s go into 47? 9. 9 times 5 is 45. It's going to take you about 9 days to pass, okay? You go on here. It says the average beyond profit target 1 is 3.7, meaning how many trades in the first 100 trades here, how many trades will get us past, how many times will we pass the evaluation within the first 30 trades taken? 3.7 times. Okay, so there's a ton of metrics here, and I'm going to run it one more time for you. So the run log shows you 100 runs recorded. Okay, but if I hit run log again, it's going to go up to 200, and you can see everything interacting and moving. This is your average TSI score. How many times did you have a TSI that was above? And if you see that broken line right here, that's your 55. That's your pass rate. But this is the big number here. How many trades is it going to take me to get through my evaluation? As you can see, this is a bell curve distribution. Not every time, that's why you run these sample sizes. It's not, hey, what did I do in the last 38 trades? No, this is running 60,000 potential outcomes. On average, it's going to take you between 20, right up to 40 trades to pass an evaluation, based on how good of a trader you are, based on your R multiples, based on your stop loss, based on the number of contracts you trade, okay, and the probability of reaching those. This is the analytics that NEC is delivering. So I'm going to move on from this page because it gets more exciting. We've got a competition. We can compete with our settings. It says versus AI right down here at the bottom. Is there a better setup? Is there a better way to get through the evaluation as quickly as possible? So what you do is say, okay, I put in my settings and the way that I have traditionally traded. Is there a better way? Let's find out. You click on snapshot. You click on, see, everything is pulsing, nudging the user what to click next. Let's click on the run 100. and it's populating your setup. It's running 60,000 potential outcomes. And if you ever forget what was my settings, it's right here. 2 contracts are sold at the first profit target, +1, +0, 25-point stop loss, and a 50% loss, meaning you're a 50-50 trader. So what we just did a 100 sample size run of 600 trades. So once again, 60,000 potential outcomes, and then you click AI optimize my setup. And then it brings up this and it says fetch the 15-day MNQ data. Let's click it. We're trying to get the volatility over the last 15 days. And lo and behold, look at this. Today is July 29th. Today is July 29th, and look at how volatile it is today. So what it's doing is its volatility regime right now is neutral, but today and probably by tomorrow, it's going to go to extreme because there was a big move in the markets today, and I believe the Federal Reserve made a decision on interest rates, which probably contributed greatly to the volatility. So now you've got your 15 days of volatility. Now AI can make an assumption as to what are the best settings. Maybe tighten your stop loss. Maybe you should be getting out of over 3 profit targets. Maybe you should only be getting out of 1. Well, let's find out. You click on Analyze My Setup, and now NEC is analyzing your settings, your inputs, your win-loss ratio, your stop loss, your R multiples, your probability of profit, and it's going to tell us, is there a more optimal way that you should be trading given the current volatility environment? And it'll take about 25 to 30 seconds, and take a look. We'll just wait for this to complete. None of this, by the way, was available on my original NEC Excel application. So here we go. We have 3 solutions. So the application will always give you or deliver 3 solutions. We have optimal at the top. We have aggressive in the middle. There's our TSI score. If you remember what the TSI is, how quickly do you want to pass? How close do you want to come to your max drawdown? And how fast do you want to recover after sustaining a drawdown? Those are your inputs. You also went ahead and said, how important are those 3 to me? In what order? Those settings are generating this TSI value based on that. So take a look at this. If you want to be aggressive and get through the evaluation quickly, it tells you 4 contracts at profit target 1, +1 at profit target 2, and 1 at profit target 3. Look at this. We're tightening up the stop. And if you really want to drill down, and by the way, there's another option as well, which is the conservative. So if you really want to drill down, click Apply this setup. So there it is. And if you want to read the logic behind why the aggressive is the way to go, you click on Expand. And AI has answered for us. The tightest stop at 15 points, 40% reduction versus the current 25 points that you, the user, populated. Maximize contract headroom for the climb algo. But wider profit target spacing means fewer trades reach early exits. PT1 is now 2.8R, which is 42 points per contract. Still inside the, okay, this is where it gets really scientific. P50, which is 666 points, but further out, so reduced W1, which is win 1, from 50% to 42% and left the break-even rate at 24%, wider than the profit target 1. I don't think I want to read all of this. What it's doing is AI is answering why they think theirs is a better metric, but let's test it. They think their settings are superior to ours. So let's see if it is better. So we say aggressive, and now you have to hit run 100 one more time. Let's run 60,000 potential outcomes using the AI aggressive setting. So we click it. It's running. You can see here. So mine is in yellow, and the AI is in pink. Or purple, I guess. So take a look. The AI setup beat my setup 4-2. It beats it on the average average TSI, Trade Stability Index. The TSI pass rate, it's even higher with AI. The average max drawdown is worse. So they have a higher drawdown, and that could be attributed because they're trading more contracts than what we modeled. They're modeling 6 contracts, 4 + 2 + 1. Sorry, 4 + 1 and 1. Whereas we only were doing 3 contracts, 2 + 1. The drawdown fail rate is higher with the AI model, but the average net P&L, it beats it by $10,000, it being the AI. And then the average profit factor is 1.89 for my settings versus 1.94. So the AI setup does win. So, and you can see the breakdown down here. And this is your average TSI score distribution, mine versus the TSI. So let's go to, I'm going to jump I'll show you. Here's the portfolio. It asks you, this is where you're getting into multi-propping, okay? Where you've got prop firms with Trade Day, with Take Profit Trader, My Funded Futures, Tradeify, Apex, TopStep, firms I don't particularly select, but you could use any, and you can choose the number of prop firms you want. It can tell you what the average, or you can model the average cost per prop, or per evaluation rather. What's your daily target? What's your average payout size once a month? How often your payout rate funded actively? So out of the accounts that you have passed and the prop firms you have passed, what percentage actually is paying you a residual income or paying you monthly? And how many months to pay out? How quickly can you get paid? So if you get paid every month, or you could say every 3 months, but for now I'll leave it at every month. And it gives you a ton of metrics. I'm not going to get into it right now. These are more business metrics. And if you click on any of the question marks, it details exactly what these tiles and what their values are reflective of. Most importantly, you want to look down here. Your annualized income would be $60,000. For a lot of traders, they have not even come close to reaching that. And again, this is kind of a broad strokes overview introduction to the new NEC application. So I'm not going to get into, I will be building a library of tutorials on how to use the NEC application, but this is some incredibly powerful stuff. One of the things I didn't show you also, let me backtrack for a second, is under the results, we can go to chart. There's all these subheadings up here. We can go to chart. And if you hit F9, F9 is a one-time random outcome, not a 100. That's the difference. The run 100 is 100 times you're going through the 600 trades. This is just a one-time shuffle like that. And it shows you your profit or loss over the first 30 trades, then from 31 to 150 trades, and then of course all 600 trades at once. And it shows you your equity curve, hence the name of the application, New Equity Curve. You can click on the distribution. So you told the computer you're a 50-50 trader, and 25% of your trades ended in break even, and then everything else, or most of them, would go to profit target 1, profit target 2, and whatnot. All you have to do is hit run 100, and you can see it randomizes with variance. So when I say with variance, it's never going to be exact, but there's a margin of error of 2.3% to the upside or 2.3% to the downside. But the bottom line is it's giving you an average of what you can expect if these are your actual numbers that you entered back here on the setup page. And I'm not going to get into this. There's also a button called scale versus 1x, meaning do I take all my profit off at a single exit? Or do I scale out? Is it better to take some money at profit target 1, some at profit target 2, some at profit target 3? Okay. So I'm not going to get granular on that. We've run through the AI. I showed you very quickly how the portfolio works. It's a phenomenal tool. One other thing I wanted to show you is under analysis. I didn't know if I showed you the cascade of how quickly you can pass. Let's say, for example, you've got a 50% pass rate. How long is it going to take you to have a total of how many funds are we doing here? Okay, so how many accounts do you want to be funded under? Some people may say, hey, I want to have 20 accounts. This gives you an idea based on, I don't know, maybe a 38% pass rate, how many funded accounts you're going to have after the first try. So after round 1, 200 attempts, basically, not 200 attempts, but across all your 20 accounts, how many passed? Well, you've got 8 out of 20 after the first round. After round 2, you'll have 12.4, so you'll continue to buy the accounts, the evaluation accounts. I apologize. I'm trying to rush through this to just give you a taste of everything that this application can do. But this is the really exciting stuff right here. If you jump into synthetic call, and it says how many prop firms are you trading right now, and how many accounts are you trading at each prop firm. And this is where we're going from trying to pass a single evaluation account to building a business. If I wanted to really make a lot of money, I've got 3 accounts at 5 different prop firms. How long is it going to take me to pass all 3 accounts at 5 prop firms? That's 15. Knowing I'm a 50-50 trader, knowing what my profit target is, how long is this going to take me? Well, this application answers it for you. You can run it as a single F9, which is, you see the icon there, the dice, hit it. And it just says after day 1, none of your firms are funded, or none of your prop firms are funded. After day 2, nothing. 3, 4, 5, 6, 7, 8, 9, 10. 10 days, and you have not passed even a single prop firm. Remember, you've got 3 accounts at each prop firm. And by the way, This application works on what's called rotational execution. If I get a signal to buy or sell, I don't get involved in why you're taking a trade. That's not what this application does. It has nothing to do with generating signals, buy or sell. This is an application that helps you run prop trading like a business, not just pass a single evaluation. I'm kind of repeating my own manifesto. So if you get a signal to buy or to sell, it doesn't matter. What we do is we allocate it to as many accounts. Now this is important that you hear this. We allocate it or copy trade it to all the accounts in a single prop firm. So let's say we're with Take Profit Trader and I have 3 accounts. I get a buy signal to go long. That is copy traded across account 1, 2, and 3. And whether it's a win or loss, it doesn't matter. I hit sell. Let's say it's a winning outcome. So we close all 3 accounts at the same time. Then we get another signal. Okay, we get a second signal. We are finished with Take Profit Trader for now. Now we're on to trade day. Once again, it's got 3 accounts in there. We get a buy signal. We take the order, and lo and behold, we had 2 winners in a row. Close the trade, book our profits. Now we get another signal. It's to go short, and we go to My Funded Futures. Now we've got 3 accounts inside of My Funded Futures. We take the trade, we're going short, and we get stopped out and we lose. So we had a winner, and now we have a loser on My Funded Future. That's okay. Next signal, it's another short, and we put it on Top Step. I don't know, I'm just making it up. We pick Top Step and we go short, and again, we got stopped out. Okay, so what I'm showing you is we rotate from prop firm to prop firm, but we copy trade within each of the prop firms. So I wanted to be clear about that, and that is what we teach and advocate in NEC. So let's go ahead and continue to hit F9, day 12, 13, 14, 15, 24, 25, and I want to show you what will happen. There we go. So on day, what does that say there? We got one, let me just scroll. Okay, so on day 38, we passed one of the prop firms. Okay, it's pretty slow, and I just want to show you how it works. But we continue. Okay, and now look at this. By day, see how they started to light up? It's telling you by day 47, you've passed 3 of your 5 prop firms, fully funded. 3 accounts, 6 accounts, 9 accounts. Methodical, consistent, and this is what we talk about in this application, is mapping out, treat it as a business. Stop swinging for home runs on every single trade. They'll come. Now, I can hit clear, and I'm going to do that for a second. I'm going to scroll to the bottom and hit reset, because I can just bypass all this and hit run all. And there it is. There's the summary. It shows you, look at this. Take Profit Trader was the first account to pass. It took us 28 trading days. Okay, this is just a single outcome, but it is a single outcome for 5 prop firms, and each prop firm has 3 accounts in there. So in one single attempt and in 28 days, you passed Take Profit Trader. And what did you pay? $510 in premium. How did that number come up? Because 3 accounts. You bought 3 accounts, $170 per account times 3 is $510. That is your capital outlay that you have to pay as a trader. Okay, Apex, that was our profit target, our prop firm number 2. And their premiums are a little more expensive, but you passed on the first attempt. You became funded. What was your capital outlay? $1,020. Now, this is before they offer these. I know Apex has been running 90% discounts on their premiums for, their very, very entry-level account. But bottom line is, this is a number, these are values without any sales, okay? They're always running 30, 40% off. So, but these are the posted cost per account. So it's $170 per account at Take Profit Trader, and we have 3 of them, so we spent $510, and 28 days later, we passed all 3 accounts. And look at this, 51 days later, we passed Apex Trader. And Top Step, we passed that in 40 trading days, okay? And only 1 attempt. And we had no failures here. But let's run a random scenario. Let's do it. Okay, so we go back up here and hit reset and hit run all. And it'll tell you the total number of attempts it took you to pass. So once again, 5 prop firms, it only took you 5 attempts. You didn't fail any of them. It just took you too long. So once again, reset, run all, 6. That means right here, because we have 5 prop firms, in this randomized outcome, you failed. One of these 5 prop firms failed. Well, it wasn't Take Profit Trader. There it is right there. It highlights in red. First attempt right there. On Apex, you failed the first attempt. You spent $1,020, and it tells you you failed on after 35 signals or 35 days. And then it says bill the second month of 1,020. So your total spend was, it was a reset. Okay, so $1,020. I guess there was a reset here. It was funded on the second attempt for a total of $1,530. Okay. Top Step you passed on the first attempt. Lucid Trading you passed on the first attempt, and My Funded Futures. Now, along the top here, there are things called Account Ladder. I'm not going to get into it. I'll hit it. I'll run it for you. And it shows you the edge from 25K account to 50, 75 to 100K account. Okay, and that's on, this one here happens to be the firm on Take Profit Trader. But this is the really important one, Batch 100. So remember how we ran 100 on an individual prop account. We ran 100 examples or shuffles of 600 rows. Remember, each attempt is 600 rows. Now we're going to run a batch 100 on 600 rows on 3 accounts across 5 prop firms all at once. We hit run 100, and it's going to take a moment. So it's going to tell you right here, on average, to get all 5 accounts. It's going to take you 69 days to get all 5 accounts passed. Okay, average, it's going to take you 39 days per firm to pass all 3 accounts in each prop firm. This is the depth of what NEC can do so that you can model properly. You can make sure you have the funds set aside. And it gets really, really granular. And I want to just show you something here. I'm going to go to Setup. And what we're going to do is, just bear with me here. We're going to hit Total Reset. I'm going to click OK. I'm going to click here. When you have a destabilizing loss, get out, go home, take a nap. I've got a bunch of quotes in here when you open the app. Most traders do not fail because they lack ambition. They fail because they size too big, get emotional, abandon their systems, and repeat the cycle. If you want to read, I've uploaded at least 60 quotes here into this application. So every time you fire up the app, it just tries to give you that kind of motivational refresher to keep you grounded as to what your marching orders are and the best practices in trading. Okay, mathematics taught me one thing. The longest distance isn't measured between 2 points. It's measured between expectation and reality. I think sometimes traders forget that math will always trump what you want. So anyways, let me rebuild this, and I'm going to show you something. So I'm going to go to, once again, Take Profit Trader. I'm going to go very quickly because this is getting quite lengthy. We're over an hour now. So we picked a 50K account. I know that my dollar goal is 3,000. I'm going to click Setup, and I'm going to go to Eval Optimal. I've already got one loaded here, so we'll hit Load. And there's my 30, 50, and 4. I've got my ideal settings. I want to get through the evaluation as quickly as possible, but I also want to match any drawdown as being as important. So let's just take a look at this. So here is a trader, this would be me, where I've got a 30-point stop loss. I take 20 signals a day. I'm trading 5 prop accounts at once. 5 prop firms, prop firms. Okay, 5 accounts, 5 prop accounts, and I'm going to bring it into 5 firms. So I divide the signal. So 20 signals a day, each prop firm gets 4 trades. 4 times 5 is 20. Okay, and I'll get into that again. I'm going to confuse you. That is not my intent. I copy trade across the accounts, and my profit target is 1. I trade 3 contracts. When I get a signal, buy or sell, doesn't matter. I trade 3 contracts with a single profit target. And my stop loss, as I showed you, is 30 points. So my payoff is almost $600 to the penny here. It's $599 because I've got a 3.33 R multiple. But look at this. I only lose 24% of the time. That means my non-losing trades are 76%. Now, this is where it gets interesting. 58% of those end in a break even. I get very few payouts. I take a lot of trades, but I have very few payouts that really pay me money. But when they do, I have one single exit, 3 contracts at a 3.33 R multiple of 180 stop loss, which pays me $600. Why did I show you all that? So I'll tell you why. So we're just going to go click load the settings, go to F9, run 100. I'm going to do this very quickly because I built this. I know this like the back of my hand. Give it 2 seconds, and then we jump to analysis. We hit clear, run 100. I'm trying to build the database so that I can put it into the SYN call. Now we jump to SYN call. 5 different prop firms. Each prop firm has 5 accounts, so I'm trading 25 accounts. And you saw my numbers. And what I'm going to do is just hit reset and hit run all. Look how quickly I can pass with these settings here. So let me just back up. 4 days, 5 days, 6 days, 8 days, and 8 days. Now you're not going to always do that. That's not what I'm trying to say. But when you get 5 different prop firms funded with 5 different accounts, and you have the kind of numbers that I'm running, look at your monthly income, $295,000. That's when all 5 accounts are funded. $295,000 when things are firing on all cylinders. That is not to say that you're going to make that every single month. That would be unrealistic. But if I go here now to the batch 100 and I run 100, remember what I just did. I've got 5 accounts, 5 different prop firms, and I'm running 600 trades times 100. That's 60,000. Okay? On average, it's going to take 10 days to get all prop firms funded, all 5. With those numbers. On average, it'll take you 6 days to get these prop firms funded. So Take Profit Trader, 6 days. My Funded Futures, 6 days. 23 signals on average per prop firm. Okay? And that's because I have a high R multiple and I take everything off at the single first profit target. So in summary, we are now at 1 hour and 10 minutes, and I apologize. We've got JJ. JJ is a hypothetical trader, and what this is, and it starts as J begins with an objective, not a promise. Build 5 funded prop firms with 5 accounts at each firm. 25 accounts in total. Copy trade is on, so every signal fires across 5 accounts at a firm at once. Same direction, same entry every time. I trade 20 signals a day, and by the way, everything I'm reading here is populated right from here, where you populated your performance metrics, your profit targets, the number of prop accounts that you want to trade per prop firm. You put in your own R multiple. These are all your numbers driving this end story. And why I built it this way is I wanted to take it away from all the numbers. This application is numbers upon numbers upon numbers. Make it relatable. Make it as a trader who's sitting in front of his computer and he wants to trade as a business. He doesn't want to be a gambler. He doesn't even want to be a trader. He wants to be a business operator in the prop trading ecosystem. If you scroll down, you see, and this is where it's powerful. Watch this. So this is every single day for every single account. I've got Take Profit Trader, I've got Apex, I've got Top Step. I keep sliding to the right, Lucid and My Funded Future. How did Jay do? He bought these 5 prop firms, and he bought 5 accounts at each of these 5 prop firms. And if you hit F9 Shuffle, take a look. Look at this. It tells you when you passed your evaluation, turns purple. Tells you when you cleared the buffer, it glows. Now if I hit F9 again, scroll down, we just got another random outcome. This time it took you day 9. And how is it that possible that he's passing so quickly in 9 days? Well, let me tell you, there's traders out there that try to pass in a single day, number 1. Number 2, it's because he's got a good track record. He's only wrong on 24% of his trades, but you would think, okay, so he's right on 76%. Well, yes and no. Remember my rule. He is not wrong on 76% of his trades. Many, though, end up or go into the break-even category. So he's got a small winning percentage, but when he wins 3.33 times what he's risking. So his payoff is a function of his stop loss, which is 30 points. That's how he can pass in, it says right there, eval passed or funded at day 9. And on day 12, he's doing so well. And it shows you each trade he takes for the day. Red dot is a loss. Red dot is a loss. Yellow is a break even. And red is a loss. He lost $541 on that given day. These are your hypothetical but yet real numbers that you have entered into NEC. You scroll down and we give summaries for the week. Week 1, he made $891. Week 2, he was up $2,630, and on a cumulative basis, he passed his evaluation on the 9th day. In week 3, he's now going into live dollars, and here's the actual verbal summary for this individual account, which is Take Profit Trader. Scroll down and accounting, where the money actually stands. Earned to cover the eval, $3,104. The target was $3,000, not payable, a different account. Okay. Real dollars towards the buffer, $2,000 he made once he passed the eval. Eligible for payout above the buffer is $5,955. The net payout after Take Profit Trader's 80% split, this application slices and dices down to such a granularity, it even blows me away that I actually built this. So at the end of week 1, he had no carry forward, but he passed 3 evaluations in the first week. So he's got 3 funded and he's got 2 more to go. And you can see the excitement in his face, his hypothetical character. Consistency is built before confidence. One funded account does not finish the journey. It proves the process can create productive capacity. Then he goes into stage 2, and now he can become stage 3, the believer. Jay no longer wonders whether the framework can work, not because NEC promised him, but because the numbers demonstrated it. I am taking all those numbers, I'm repeating myself, but I'm taking all those numbers and building them into a realistic type of story. This character's name happens to be Jay. He's got 3 that he's already funded, and lo and behold, in week number 2, he just got the other 2 accounts funded right there in purple. He now has 5 funded accounts in 2 weeks. Each of those accounts has 5 funded prop firms. Each of those has 5 accounts in there. Evidence became impossible to ignore this week. My funded futures and take profit trader all completed their objectives. 2 evaluations have now transitioned from possibility into productive capacity, not because NEC promised Jay it would happen, because the numbers demonstrated it. Jay's first 3 funded accounts begin producing live evidence. Funded does not yet mean withdrawals. The first 2,000 on each account must rebuild the required buffer before payout capital becomes accessible. The distinction turns excitement into responsible cash flow planning. 18 winners generated $10,783, while 36 losers accounted for $2,352. The week closed at $8,431 with a 33% win rate. 3 funded firms rebuilt the minimum withdrawal buffer this week, restoring payout eligibility. So it tells you right here, 18 wins, 36 losses, but look at, and this is the asymmetric way that you get paid. So the risk is $180 per stop out versus almost $600 when it's a win. And I have very few losses, but I do have a very large break-even component in this. Follow this through all the different, and again, you can go from, I can shuffle this again and see how quickly he passed here in this random outcome on the entire prop firm with 5 accounts, and it shows you right down to each trade. Loss, win, break even, win. Loss, win, and 2 break evens. And in day 11, he passed the evaluation. What if I switched over to a different prop firm? So let me find, okay, here we go. I can go to Lucid. And by the way, the graphs are all interactive, okay? You can see his progress on a cumulative basis or on a daily basis. Just drag your mouse, left click and drag. Scroll down, and you can see how Jay passes. And at the very end, take a look at this. Funded progress. Well, it shows you right here. Week 0. Week 1 of 5 funded accounts at the end of week 1 in this random outcome. By week 2, I'm sorry, it was 1 of 5 were funded. By week 2, we've got 4 of 5 prop firms funded. By week 3, all 5 prop firms have been funded. We can go here to the live P&L when we get funded, where some of the prop firms have passed, where maybe a couple are close and they haven't passed, or maybe they failed. That happens, believe me. So it shows you your actual earnings on 5 accounts at 5 different prop firms. Now remember, not every prop firm is passed in week 3. Well, in fact, I think all of them were passed in week 3 here. But take a look at the actual returns. That's why it's called live P&L. In closing, because this is now an hour and 20 minutes, and I apologize. Most of you probably won't listen this long, but I just wanted to get this out here. Jay did not become a better trader because 1 week went his way. He became a better decision maker because the complete path was finally visible. The market did not change. Jay did. Engineer the decision, not the trade. So I'm going to wrap it up here. This was big. I get it. I understand. It's like I said, it's going to be 1 hour and 20 minutes by the time I finish. But I wanted to open up a lot of eyes. I have a really bad taste in my mouth with the direction prop trading is going, and especially in the social media circle. There is a lot of smack being talked back and forth between specific traders, and there's a lot of terrible things that are also happening with specific prop firms. So you got to do your homework as to where you want to allocate your evaluation dollars. That's the only money they're going to get from you. But there's stories of traders being delayed payouts, being denied payouts, prop firms collapsing. If you're listening to this, you know all of this. It's a little bit greasy. And what I'm trying to do is bring my 25 years of experience in the licensed capital markets, and in particular the derivatives and the options market, the analytical side with some professionalism and some business savvy, not just trying to swing for the fences and pass an eval. You can be very, very aggressive. In fact, I encourage it. I didn't initially think that way, but you can. I do now encourage being aggressive, especially in the evaluation phase, but with a plan, knowing the numbers, running the models, and that's what NEC delivers. So I hope you enjoyed this. I'm right at 1 hour and 20 minutes. So until next time, I hope you enjoyed it, and stay tuned. I'll give you all the particulars if you're interested in this application. Just to let you know, I charge $299 for the first 500 subscribers. One time, not monthly. It's $299. So if someone's out there thinking that's kind of a lot, I probably don't want to talk to you. When you consider how much money traders are spending on evaluations daily, if not weekly or monthly, this is a steal. This is a tool that does not exist. It's why I built it. I took my 29 years of trading background, of which 25 was in options. I'm repeating myself, but I wanted to build an applicable tool that I found I used when I modeled my options trades. I wanted to have something comparable in the futures prop space. So I think I've delivered a grand slam here. Hope you enjoyed this. Stay tuned for the next one. Thanks for watching.